This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. This is Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And we have a very exciting program for you today. We have the infamous Doug Casey. Now, some of you may not know the infamous Doug Casey, but that's why you're listening to this program today, because when I think of Doug Casey, I think of Indiana Jones. In fact, he kind of looks like Indiana Jones. If he had a bullwhip and a gun on his side and a hat on, he looked just like Harrison Ford. And the reason Doug Casey is so infamous and so famous is because in a program that Kim and I were in a number of years ago, we did 3 junior companies. And for those of you in the commodities business, understand that juniors are the highest risk of any investment possible. We had a gold company out of China, we had a silver company out of Argentina, and an oil company out of Portugal. So Kim and I were working with our great friend, a gentleman named Frank Crary, who passed away not long ago. But Frank kept talking to us about juniors and the world of commodities like oil, silver, and gold. And Doug Casey's name always came up, always. And Doug Casey is like a legend, and he's a soldier of fortune. He's the author of Right on the Money, Crisis Investing, International Man, and Totally Incorrect. I think what I love about Doug Casey, he's not politically correct. He calls it and tells it as he sees it. And so with that, remember Frank talking about Doug all the time?
Oh, yeah. That was the first time I've heard of Doug Casey, and why he's so perfect for Rich Dad Radio Show is he's also contrarian, as you are, Robert. He's a contrarian investor. But what else I love is he travels the world. He's been to like 200 countries, and he's boots on the ground. He sees what's happening firsthand, and he's investing, and he's watching the economy, and he's looking at politics. He's the whole package, and he practices what he preaches. So I am so excited to get started.
So just think of Harrison Ford and Doug Casey in the same breath and same picture, and you got the picture. So Doug is going to this is going to be part 1. Okay, everybody, part 1, because we're going to be talking about possibly the most important investment or education you need to have today at this time. So this is part 1, which is the basics. And later Doug will become on again. We'll go to part 2, which is the advanced. So pay attention today, because if we go to part 2, you haven't listened to part 1, you're going to miss out on a lot. So what Doug's going to be talking today is about why gold and possibly silver, you should be in it today, not tomorrow. So with that, I want to welcome to the program Doug Casey. We're going to get into part 1. But Doug, give us a little bit of your background, please.
Well, thanks, Robert. I'm very flattered.
It fits. Indiana Jones.
It's funny. That was a great introduction. But it's a little bit like, I'm not sure if many of your listeners will know who Harry Brown was. Harry was a very good friend of mine. And one time when Harry was, Harry met a guy and he said, hey, the guy says to Harry, he says, hey, aren't you the guy who made $1 million buying gold in London? And Harry said, well, kind of. It wasn't London, it was Zurich. And it wasn't gold, it was silver. And it wasn't $1 million, it was only 100,000. And it wasn't buying, it was selling. And it wasn't me, it was my brother. And he didn't make it, he lost it. So there's always, but yeah, there's some truth to that. But I was born in Chicago, grew up there in Washington, D.C., the heart of the beast. And when I'm in the U.S., I've usually lived in Aspen, Colorado. But for some years, I've actually been living different places in the world. Something that I recommend to everybody for at least a period of their lives for lots of reasons. So right now, as we speak, I'm in Buenos Aires, and I spend a couple of months of the year here in Buenos Aires, and even more time across the Plate River in Uruguay, a quiet, backward little country.
So how in the world did you get into gold, Doug?
Well, the first thing I wanted to be when I was a kid was a paleontologist. Dinosaurs. Everybody likes dinosaurs. And, of course, paleontology is a division of geology. So I became very interested in rocks and things of that nature. I got interested in gold in particular when I read a book by Henry Hazlitt called Economics in One Lesson. It's only about 120 pages, but it's brilliant. I'd say it's one of the 10 most important books anybody can read.
What was the name again? What was the name again?
Economics in One Lesson.
By who?
Henry Hazlitt.
Hazlitt.
Yes.
Okay, Henry Hazlitt. Good. We'll look at it.
It's a work of genius.
Okay.
And everybody should read it. You can start reading it in grade school. You can read it in postgraduate if you wish. It's that kind of book. Very, very well written. That introduced me to concepts of economics. And then I've already referenced my friend Harry Brown, who wrote a book in 1970 called You Can Profit from the Coming Devaluation. And it talked about why the U.S. dollar was going to collapse and why gold and silver were going to go up. And once again, it's a gem. And at that point, I started buying gold coins, got interested in gold stocks because of my interest in geology. And so that's how I got into this whole area.
Good. And then let's Rich Dad is a radio. It's about the good news and bad news. So can you give me as much bad news as possible as what you see coming because of our foolish monetary policy since 1971 when Nixon took us off the gold standard?
And you see it from a worldview because you do travel the world so much. And so I know the U.S. affects everybody. It's a global economy. So, yes, what do you see? What do you see happening?
Well, like I said, I'm in Argentina now, and I spend several months of the year here. And it's very unfortunate that the U.S. is following in the footsteps of Argentina, which at the turn of the last century, in the early 1900s, was one of the richest countries in the world. If you were a European and wanted to leave Europe, you basically thought about either the United States or Argentina. But Argentina is faded glory right now, and it keeps going downhill. In fact, they've just reelected a strident socialist here, and I think this economy is really going to go into collapse. But the problem is that the United States is following in the footsteps of Argentina. It's a question of more taxes. It's a question of printing up money. It's a question of more laws and more regulations and less freedom. That's happening all over the world, though, I've got to say. It's almost like what Joe Louis said. You can run, but you can't hide, because every country in the world is going in the wrong direction. And I tend to look at things from a very long-term historical point of view. In fact, most of the reading that I do for personal amusement tends to be history in general and ancient history in particular. And so I tend to look at things from that point of view. Well, really ancient history, of course, is geology. We can go back 4.5 billion years. But I'm very pessimistic about the way the U.S. has been evolving. In some ways, technology and science have been improving rapidly at the rate of Moore's Law, where knowledge doubles every 18 months, computers, for a long time. But that's only science and technology. Economically, They've been making lots and lots of mistakes and compounding them for a long time. It really started with Roosevelt. It started before then. But the trend has been accelerating, and it's going to wind up. Robert, to answer the question, we're on the lip of what I call the Greater Depression. In other words, a depression much worse than what we had in the 1930s, period from 1929 to 1946. It's going to be much worse, much longer lasting, and much different. So hold on to your hat. That's probably a longer answer than you were looking for.
No, so that's perfect. And they didn't solve the problem in 2008. They actually made it worse, which made, for Kim and I, like I said, Kim and I have started 3 startups, 3 juniors, and we were in position. Like, we started this junior mining company. It wasn't even developmental mining. It was exploratory, and we built it in China. And gold was at that time about $200 or $300 an ounce, and it kept going down. So we came public through the Toronto Stock Exchange, and we're in position, Doug. We're in position. I think gold went down to $250 an ounce, and everybody else was saying, "Why are you in gold?" I said, "Well, because it's about to go up, idiot." So Kim and I were in position. The problem was we're in position in China. And you know what they do when they find a good gold mine? They took it. So Kim and I kind of got hosed out of billions of dollars. Right, Kim?
Yes, we did.
But
Yes,
we learned a lot.
We spent all the money and time and effort and found the gold and did all the work. And then the Chinese government said, "Thank you very much. We'll take it now." That was about it.
And so, I realized something, Doug, that it's cheaper to buy gold than start a gold mine. And yet for the average investor, and this is part 1 of a show on gold featuring Doug Casey. So if we can go into why is gold the investment of today? Could you go into that?
Well, the problem is with the dollar. The dollar used to be backed by gold. It used to be redeemable in gold at a fixed price, $20 an ounce. That meant that you could take your $20 bill and go to a bank, and they'd give you an ounce of gold in the form of a $20 double eagle. That's no longer the case today. They cut the link between gold and the dollar, and since then, the dollar has been on a slippery slope. Just since 1970, which was when the first link was under the Roosevelt administration, when it made it illegal for Americans to own gold. Second link was under the Nixon years, when Nixon would no longer redeem the dollar in gold for foreign governments. And the price level in the U.S. has been going up, which is really the dollar has been going down. The reason you want to buy gold is it's the only financial asset that's not also somebody else's liability. In other words, you don't have to trust a government if you own gold. In fact, the more stupidly governments act, the better gold does. So that's the basic argument for owning gold.
So lesson number 1 for all the newbies out there is there's no counterparty risk. No counterparty risk. That means gold is gold. You don't need the backing of the U.S. government, the Chinese government, or the blessings of God. It is pure God's money. It's gold. Atomic number 70.
You don't have to trust anybody.
What's that?
Exactly.
Yeah.
You don't have to trust
You don't have to trust anybody.
You don't have to trust anybody.
And so that's what. If you have a gold gold eagle in your hand, it's going to stay there for a while.
Yes, that's exactly right. You don't have to trust anybody else. And in a world that is head over heels in debt today, much of which I think is going to be defaulted on in the years to come, which is, of course, what the crisis of 2008 was all about. gold is the best thing to have. I don't know what else you can. You can own Bitcoin. Very interesting as a mechanism for transferring wealth across borders. But gold is basically where it's at, and you should do your savings with gold, not with dollars in a bank account.
Okay, that's it. That's lesson number one. And again, this is part one with Doug Casey. Like I said, every time I think about Doug Casey, I think of Indiana Jones because he's all over the world, chasing gold mines and fruit flies all over the world. And he is really an international man. So this is part one with Doug Casey on why gold and silver are your base investments, especially today, especially since 2008 when they've been printing so much money and pensions and all that are about to collapse. So saving gold and silver is far better than saving dollars, yuan, and yen. We come back, we'll be speaking part two with Doug Casey again, why gold is your basic investment platform. What would you call that, Kim? Or your foundation. Right?
Your gold would be the foundation. And I also would like to talk to Doug about, he talks about the Greater Depression coming and what does that look like and how do we prepare for that with gold and other
But the biggest
other
question,
investments.
but the biggest question everybody asks for, what do you think the price will be in 5 years? Everybody wants to know what the price will be.
Short-term thinking.
Like I said, Kim and I, we were in position when gold went all the way down to about 250 an ounce, and then the Chinese, we were in position, we're on time, we're on schedule. Damn, the CCP, the Chinese Communist Party, helped themselves to our gold mine in China. All's forgiven. They banned my book Fake because I mentioned those people in my book Fake, so they banned my book. But anyway, it was a good exercise, good lesson, so that's why I'd rather own gold than a gold mine. But when we come back, we'll be speaking to Doug because one of the best ways to make a lot of money is to speculate in the gold mining industry, not necessarily gold. So when we come back, how much will gold be? And what's the difference between investing in gold versus gold miners? We'll be right back. Welcome back to the Rich Dad Radio Show. This is Robert Kiyosaki, the good news and bad news about money. I'm here with my sweetheart, Kim. And you can listen to the Rich Dad Radio program anytime and anywhere on iTunes or Android. All of our programs are archived at richdadradio.com. We archive them because repetition is how we learn. And if you listen to this program one more time, you'll pick up almost twice as much. And all we do is we don't recommend anything. We just recommend you learn. And you can leave your review wherever you are listening to the show. Just let us know what you think of the show. Was it worthwhile, or what else do you want to hear? Because our guest today is Doug Casey. He's called the International Man. He's the author of Right on the Money, Crisis Investing, and Totally Incorrect. But for the years that Kim and I were in the junior mining business of gold and silver, Doug Casey's name always came up, and the people always referred to him. Our friend Frank and all the other guys on the Toronto Stock Exchange always referred to Doug Casey as more like Indiana Jones, this wild guy that traveled the world with a bullwhip and kept poking his nose in places where most people wouldn't go. And today he's living in Argentina, and he's speaking today about why our fear of the future, I think, is here today. For Kim and myself, and we're gold bugs, we're contrarian. But I've been investing in gold since 1972 when it was illegal for an American to buy gold. Imagine that. So, Doug, I want to get into it. What's the difference? Well, go ahead, excuse me. Go ahead, Kim, what do you want to say?
So what I love about Doug is he is a contrarian investor, and he has years and years and years of experience of building his wealth in times of crisis. So what we're talking about today is Doug's talking about not a Great Depression, but a Greater Depression coming. So he is an expert on what to do with your wealth in terms of crisis, which is going to be coming, and we're going to find out when and how from him in just a moment. So this is crucial.
I think it's on us right now because we have a bull market in stocks and a bull market in bonds, and that can't last forever. So anyway, Doug, we covered counterparty risk, which means there's nobody else except you and God and your gold. And as Jim Rickards recommends, keep it outside the bank because they can steal it in the bank. The next thing I want to get difference on is like Kim and I started off as junior miners. I'm a real junior. Out of Argentina was our silver mine, and our gold mine was in China. The Chinese took it from us. Silver mine's still going, by the way, which is good. But anyway, when do you invest in the physical gold, like, gold eagles or gold or silver eagles or whatever you invest in versus a mine? What's the difference?
Well, you buy the physical metals, gold and silver, and the best way to do it is in the form of coins. You buy those for safety, for prudence, for insurance, for savings. Totally different game than speculating in mining stocks. There are so many things that can go wrong in the mining business. It's probably about the worst business in the world, actually.
Thanks for telling us now.
I wish we had known that years ago.
We have to agree with you.
Well, yeah, it is a terrible business. It's not even like it was in the 19th century, where if you found a gold mine, you were going to be wealthy. Today, because the world has been very picked over for thousands of years with people looking for gold, looking for silver, all the easy to find on-surface high-grade deposits, they've basically all been discovered. And many of them are in countries that make it impossible for you to mine. So your odds are hundreds and hundreds to one against you're actually finding a deposit. And then the odds are hundreds to one against that deposit being economic. And then if it is, when you build the mine, that's when your troubles really start. Because it's not just a question of Treasure of Sierra Madre, where you get a mule and a shovel and a pickaxe and go out and make a fortune. Today, the legal fees, everything else, it costs scores of millions, sometimes billions, to develop a mine. And your troubles get worse after you build it.
And there's no guarantees. There's no guarantees you're going to find gold.
No guarantees it's going to be profitable when you find it.
Right.
But after you find it, then the banditos come out.
Exactly.
The government comes out.
The NGOs are going to make your life miserable. The government is going to treat it as a milk cow. They're going to want to tax it and regulate it. The workers are going to want more money. It's a nightmare.
And not only that, the bribes you have to pay. I mean, we're going to ask for so many bribes once we struck it that we're going to go broke just on the bribes.
And when we didn't pay the bribes, that's when they took it away. Oops.
No, it's one thing after another.
Yep.
But with all the problems there are in gold mining, there are still about 2,000 so-called gold mining companies in the world. Most of them are exploration companies. They're on an Easter egg hunt looking for gold. Others are developers. They think they've found something, and now they're spending money to prove it out. And there are some producers. But out of a couple of thousand, most of them should be avoided. But this is all bad news. I don't want to have nothing but bad news.
What's the good news?
The good news is that in a gold bull market, these stocks have teeny-weeny market caps. They're not small caps. They're not micro caps. They're not even nano caps. A lot of them are pico caps. They're so small. And what that means is that when the tenor of the market changes and people want to get into gold, just a small amount of money can send these things flying. So in past gold bull markets, small mining companies, juniors, as opposed to seniors, which produce and are big companies, the whole market moves 10 for 1, and many individual stocks move 100 for 1, and some stocks have moved 1,000 for 1. And I've personally owned a couple of those, believe it or not. But that's the good news. So it's an area for a speculator. You can't really invest in these things because they're mostly burning matches. They're always raising money to solve the problems that we've just been talking about. But they're good speculative vehicles, fantastic speculative vehicles, if your timing is right. My personal belief is this is one of those times when you want to own them.
You might want to try one. So, there's also the majors like Barrick, right? Is Barrick still the king dog out there?
Well, I don't buy these big companies. The larger a company gets, the more distant the management is from the assets on the ground. Big usually means slow-moving and stupid.
Just like government.
I prefer to own companies that where I personally know the management, and the management are the founders of the company, are major shareholders, and have real skin in the game. Now, so that's the kind of mining companies that I buy. But once again, I'll emphasize it's a very, very risky area, high potential, but very, very risky.
So none of us are recommending you get into the miners, but if you are thinking about this might be the time, and if you find a little company like we started, little Mondoro Mining, where we hit a huge play out of Dalian, China, the problem was a good goal but wrong country, then you might strike it rich.
So Doug, other than gold, you see this huge depression coming. Other than gold, are there other opportunities out there that you see that we should be paying attention to?
Well, everything is overpriced in today's world. And that sounds like a strange thing to say. How can everything be overpriced? Overpriced against what? But the fact is that since the crisis that started in actually 2007, but let's say 2008, these governments, not just the American government, but the Europeans, the Japanese, the Chinese, everybody, have been printing up currency by the bushel basket. And where has all that money, so-called, gone? It's created bubbles. It's created financial bubbles. We've had a bubble in cannabis stocks, which incidentally were very, very good to me. That bubble has burst, however. Cannabis may be interesting as a business, not interesting as a speculation right now. The bubble flowed into cryptocurrencies, which I do think have a future. Some of them do. There's a couple thousand cryptocurrencies like Bitcoin, but most of them are worthless or frauds or promotions. But some of them do have 100-to-1 potential, in my opinion. The stock market is in a bubble. The bond market is in a hyper bubble. I wouldn't own a bond to save my life at this point. There are very few places you can go for both safety and upside. I like commodities because most commodities are selling below their cost of production.
Right.
And of course,
and you mentioned hogs because I don't know if it's swine flu or something, but there was some disease wiping out hogs. And Kim and I were just in Hungary, and you mentioned on YouTube with Kitco that you were investing in hogs because hog futures, or you're putting puts on hog futures because the Chinese eat pork.
Yes, this is very interesting. Half of all the hogs in the world are in China, and China is by far the largest consumer of pork. Okay, basic fact. But the problem is that already half of the hogs in China, a quarter of all the hogs in the world, have died of swine flu. It doesn't affect humans, but it is deadly and incurable for hogs. And it's spread to Vietnam and Korea and other places in East Asia. It's spreading to Europe. And surprisingly, even though over a quarter of all the hogs in the world are already dead, and hog supplies are way down, in the United States, farmers are still losing money on hogs. In other words, they're currently selling at around 67 cents. But at that price per pound, that's for a hog on the hoof. But farmers are still losing money at that price. I think hog prices are going to have to go up a lot. But it's hard for the average person to do anything in the hog market.
I was going to say, how do you invest in hogs?
Yeah, you don't want to own a hog farm.
No.
Right now, it's a money-losing proposition. Might be a good time to buy a hog farm, but I don't want to manage a hog farm. I don't know how to do that.
I'd make them all my pets.
So, hey, Doug, the last question is this, okay? Gold is measured in currencies. So you have the Japanese yen, Chinese yuan, the European euro, the dollar, the peso. And right now, is it true that gold is reaching all new highs according to different currencies except the U.S. dollar? In other words, if you're a U.S. citizen with U.S. dollars, the price of gold is still cheap. But if you're in, let's say, Mexico, gold against a peso is now expensive. Is that how you look at it?
Yes, you're absolutely right, Robert. Gold hit its last high in 2011 when it hit over $1,900 U.S. dollars. And since then, the U.S. dollar has been the strongest currency in the world. Now, why might that be? It's because in Europe and Japan, they have negative interest rates. I thought that was metaphysically impossible. But you actually have to pay money in some countries to put your currency in a bank. This is completely insane. It's not going to last. But because we have interest rates, positive interest rates here in the U.S., they're low, but they're still positive. A lot of money has been flowing into the U.S. dollar. So the U.S. dollar has been the strongest currency in the world. I think it's time to get out of the U.S. dollar and use that U.S. dollar to buy bargains in other countries. And frankly, gold is a bargain. Silver is even more of a bargain right now. It's relatively cheap relative to gold because it's also an industrial metal, not just a monetary metal, but an industrial metal. And like all commodities, it's cheap. Silver is selling below cost of production in almost every mine in the world today. And that's when you want to buy things, when they're cheap, when the producers can't make money producing them. That's when you buy them. And you sell them when the producers are making lots of money. Why? Because when they're making lots of money, they produce more. They open up new mines. They plant new fields with corn and wheat, whatever. So this is an excellent time to buy commodities.
Okay, so this is the last question that everybody wants answered. It's what's the price? And we have Harry Dent, who claims gold's going to go to $400 an ounce. And we have Jim Rickards. By the way, he and I are writing a book together called The Ravens, coming out 2020. But he's calling for $10,000 an ounce for gold. Then you have Jim Rogers, who's waiting it to collapse, the price of gold to collapse. Then he's going to trade dollars for gold. So in between those three gentlemen, Harry Dent, Jim Rogers, and Rickards, where are you with the price of gold?
Well, anything can happen. Just like negative interest rates, which, as I said, I thought were metaphysically impossible. Anything can happen. The only way that gold is going much lower than it is today is if we have a credit collapse. In other words, if massive amounts of debt in the world, of which, use the number you want, 40 trillion, 80 trillion, 200 trillion, it depends on what you want to look at. But if we have a credit collapse and that debt is all defaulted on, dollars will all of a sudden become very valuable. And yes, gold will go down. The price of everything will go down in dollars. I think that's very unlikely. what the Federal Reserve is doing, what the Central Bank of the U.S. and the central banks of other countries are doing. They don't want that to happen. So they're printing up money hand over fist. As a result, I think gold is going to go higher. There's going to be a panic in the gold. Pick a number. Well, it depends on the time frame. Eventually, the dollar is going to reach its intrinsic value, which is basically zero. It's the on-back liability of a bankrupt government. Pick a number over the next couple of years. I think we're going to see $3,000 gold in a couple of years.
That's a good
beyond
call.
Beyond that, sky's the limit.
Yep.
And the other side of it, Doug, you know what Rickard says? He says, you better buy it when you can buy it. And what he's saying that if and when that panic hits, you won't be able to buy it. It's going to dry up really fast. Would you agree with that?
Yes, that's a good point, because for years, the Russian and Chinese governments have been very, very big buyers of gold. And I expect that we're going to see a gold-backed ruble and a gold-backed yuan in the years to come. Why? Because everybody has to trade in dollars today. But the Chinese and the Russians don't want to trade in dollars. They clear through New York. And you don't want to use your adversary's currency, maybe your enemy's currency. So they're buying gold. Now, how much gold is there in the world, you might ask? The answer is nobody knows, but probably about 6 billion ounces above ground. There's almost 8 billion people in the world. That means that there's only about 3/4 of an ounce of gold for every person on the planet. And a lot of governments are buying it now because they know that they're just trading paper with each other. So yeah, you should be buying gold now because the price is going much, much higher.
And
so,
what? Oh.
So you'd agree that if they start to buy it, you won't be able to get it. It is supply and demand.
Well, you can always get it at some price,
Right.
Unless of course the government illegalizes it again and makes Americans turn in their gold. I don't think that's too likely, frankly, but anything's possible. Look, if one of these crazy Democrats is elected, they're capable of doing absolutely anything. So, yeah, you should be buying it now.
And final question, Doug, is talking about this Greater Depression and this crisis coming. Any prediction on when or what we should be looking for to prepare?
Well, it depends on who you are. For the average American, in some ways, the Depression started in the 70s because his take-home pay has been going up less than the general price level. It's gotten worse since 2008. So if you're the average middle-class American, your standard of living has been going down. If you're a rich guy, you've been getting a lot richer because that fire hose of money from the Federal Reserve has been flowing into the hands of the rich guys in the stock markets, in the bond markets, and the real estate markets. So it depends on who you are. But remember, a depression is a period of time when most people's standard of living drops significantly. And that's going to happen, especially when the financial markets melt down, which I believe they will in the next few years.
Okay. Thank you very much.
So listen, everybody, this is Doug Case again. When you think of Doug Case, you think of Indiana Jones, a soldier of fortune who travels the world, has a great life. But also, this has been part one, you know, what the basic strategy for precious metals should be. And the next time we have Doug on, he's going to go into part two, the advance. I better bone up on that one because he goes above and beyond my head. So, Doug, thank you very much.
Thank you, Doug. So appreciate it. You are a wealth of information.
Well, Robert and Kim, it is a pleasure talking to you absolutely anytime.
Thank you.
We appreciate that a lot. We're going to reach out to you.
We're going to call you back for part two, the Advanced Gold and Silver Investor Summit on this. So thank you, Doug.
Thank you. Enjoy Buenos Aires.
Okay. Thanks, guys.
Thank
Hope
you.
to see you soon.
Bye-bye.
Thanks. Hope to. Bye-bye.
Welcome back to the Rich Dad Radio Show, the good news and bad news about money. Once again, listen to the Rich Dad Radio program anywhere on iTunes or Android. And all of our programs are archived at richdadradio.com because repetition is how we learn best. Listen to this program one or two more times or with your friends or family or business partners and discuss it, and your education level will blow your brain apart. You'd be amazed at how much you remember just for listening to one little program. Any comments, Kim?
And if you do have a question and would like to ask a question of Robert or me or anyone else, use the hashtag AskRichDad on any social media platform. Ask Rich Dad if you have a question.
And we are a pure education company. We'll make recommendations. Full disclosure, Kim and I own a lot of gold and silver, and we don't keep it inside this country. And we move it legally. You can move it illegally, move it legally, move it legally. Please do that. But that takes a while. But anyway, I don't trust our banks at all. We've done very well on it. But I want to talk about what it was like to start a junior mining company. So Kim and I started an oil company in Portugal, and people said, well, there's no oil in Portugal. And we found out, they're right, there's no oil in Portugal.
Well, going way back and meeting our friend Frank Crary, you wanted to learn. You said, I want to learn how to take companies public.
It's called an IPO, initial public offering.
And our neighbor said, oh, well, if that's what you want to do, you need to meet my friend Frank Crary. And that's how this whole thing started.
And then Frank wouldn't meet with us. He says, I want to talk to you.
Yep. So it actually goes back to a rule of thumb that is you have to be clear on what it is you want. And once you're clear on what it is you want, things show up. People show up. And Frank showed up.
And then ask people who've already done what you want to do, you know. So I didn't listen to some stockbroker tell me to take a company public because they don't know anything about that. But Frank was the expert. They call him the silver fox of Wall Street. I don't know how many IPOs he did, but he did a lot of them, and he never went to jail. So he must have been pretty good.
He was doing it legally.
We
always say do it legally, ethically, morally.
So I had to call him, and he wouldn't talk to me. And finally said, okay, I'll give you 10 minutes. So I drove all the way up to his house in Arizona, a place called Pinnacle Peak, down this old road. And Frank was into horses and all that stuff, you know. Very rich guy. He moved from Connecticut to Arizona. And I sat down in front of him, and the first thing he says, you really want to learn, don't you? I said, yeah. I've never taken a company public. And I like gold, and I like silver. I'm already buying it. Can you tell me how to take a company public? And his words were, you know, you're the first person to ask me for education.
Yeah, he said, everybody comes to me either asking me for money
or a job.
And
he sat there and he looked at me and he says, you're really serious, aren't you? And I said, yes, I'm serious. I really want to learn, you know. And because if you want to learn, seek mentors. You know, I read about that in Fake. You want to find the best teachers, you better find real teachers because most teachers are fake. So he says, okay, you got a deal. This Saturday, you are to be in Lima, Peru. I said, this Saturday? He goes, yep, because on Monday, you're meeting with, I can't mention the bank, you're going to meet with Banco, and you're going to inspect 3 gold mines for me. I said, this Saturday? And he smiled at me and he says, how bad do you want it, son? And he's already 90 years old, and I'm in my, late 40s. How bad do you want it? Remember that?
I do remember that because we were scheduled to fly to Austin, Texas, and we were doing a filming because we were about to release the cash flow game. And this was a filming that we were doing for the cash flow game. And you came home and you said, Frank said, if I want to learn, I need to go to Lima, Peru this weekend. So I went to Austin, Texas. We still did the taping and all the filming necessary, and you went on to Lima.
Yeah, this is 1995.
Yep.
And when I flew out of Lima, Peru, I didn't know anybody. And I walk into the bank and I say, I'm here to look at these three gold mines here up for sale. And they said, okay. And so I met one of Frank's engineers, mining engineers, and we drove up to 17,000 feet without oxygen. I nearly died up there. And then I crossed over to another mine, almost died up there too. And I kept looking at these gold mines, and I realized I didn't even know what gold mines look like. But then I started just opening my eyes up, and I came back to Scottsdale, Arizona, and so Frank says, what did you discover? I said, Frank, none of those mines will work. He goes, why not? I said, well, number one is that we'd have to fire everybody. If we fired everybody, their families are buried up there. I saw graves everywhere. They've been mining these places for 50 years. They have to kill, they would fire, they're not going to leave their families buried up there. And at the time, there was Shining Path, which was their guerrilla group. It's like their Viet Cong was going wild. And I says, the first thing they're going to do is kill our miners. They will come in. When we fire all the miners and put in new miners, they're going to kill our guys. And Frank smiled. He says, good. I already knew that. I just wanted to see if you'd go.
That's a good teacher.
And Frank became one of our best friends.
Yes, he did. Yes, he did.
And all the advisors like Kenny and all these guys, they just loved him.
Yeah, we learned a lot from Frank. We learned a lot of life lessons. We learned a lot of business lessons, and he was a great mentor, and he was a guy that was the real deal. He totally practiced what he preached.
So we'd have parties, and all the young guys would hang around him and just pick his brain. He'd tell us stories, and he was such a great, real teacher. He's one of the best we've ever had.
Yep, he is.
I miss him. He was such a good man. So, ladies and gentlemen, with Robert Kiyosaki, with Kim Kiyosaki, the Rich Dad Radio Show, we are an education company, but education doesn't mean getting an MBA. Getting an education means getting your boots on the ground, going to 17,000 feet, looking at gold mines and realizing you'd probably be killed if you started one anyway. But like I said earlier, I found out the good thing is it's cheaper to buy gold than to start a gold mine, right, Kim?
I'm going to buy gold, and I'm not going to start a gold mine.
So thank you for listening.
Thank you.